Tell us a little bit about yourself and your business.
My name is Mike Sowers, and I'm the CEO of Commercial Investors Group, which is the only commercial real estate investing franchise system in the world. Our business was started in 2005 as a house flipping company, and we transitioned to be a commercial flipping company in 2018.
The Franchise Hot Seat is for information and entertainment purposes and is not an offer to sell franchises. If the Hot Seat introduces you to a franchise concept that interests you, you must do your own due diligence before making an investment. Welcome to the Franchise Hot Seat. I'm your host, John Hayes, Director of the Franchise Center at Palm Beach Atlantic University. On today's episode of the Franchise Hot Seat, we feature a concept to be evaluated by our dream team. Let me introduce you to the dream team. CEO of United Franchise Group, Ray Titus. Managing Partner at Planet Fitness Midwest, John Clancy. MPK Equity Partners, Patrick McGee. Co-founder of Pillars of Franchising, Kristin Selmeczy. President and co-owner of Fran Fund Incorporated, Sherry Seiber. First up in the hot seat.
My name is Mike Sowers. I'm the CEO of Commercial Investors Group, and we buy and reposition distressed commercial real estate assets. Our vision is to help other people become financially free so that they can buy back their time and spend their life doing the things that they were called to do. So we formed the company in 2005. For the first 12 years, I was a house flipper and a contractor. In 2017, we sold the construction company, and that's when I thought I finally had enough capital to start buying commercial real estate. And once I bought a couple properties, I ran out of money, but I still had deal flow coming in, so I realized that I had to figure out a better way to raise the down payment for commercial deals. And that's when I started syndicating deals, which is just pooling money together from private investors in order to buy commercial real estate. In the real estate realm, once you can figure out how to raise private equity capital, it unlocks your ability to do really an unlimited number of deals. You're no longer limited by how much money you have in your own personal bank account. And once I realized how much more exciting and fun commercial real estate was, we got rid of all of our residential properties and went all in on commercial. And about a year ago, then we started franchising that concept with a vision of growing the company to be the largest national firm that's a known household brand that helps other people in local markets partner with us on deals to expand our portfolio across the country. We are Commercial Investors Group, and our vision is to help others achieve financial freedom so that they can buy back their time and spend it doing the things they were called to do.
Welcome to the Franchise Hot Seat. Tell us a little bit about yourself and your business.
Thanks. My name is Mike Sowers, and I'm the CEO of Commercial Investors Group, which is the only commercial real estate investing franchise system in the world. Today I'm standing before you looking for an equity partner to come into our corporate equity fund to help us raise the down payment for our commercial real estate deals. Our business was started in 2005 as a house flipping company, and we transitioned to be a commercial flipping company in 2018. And once I realized how much more scalable, fun, and exciting commercial was, I broke off the rearview mirror and I'm never going back to residential. We basically focus on finding distressed commercial assets. We really like any asset, but I'm focused heavily on buying office and industrial properties. Our vision is to grow a $1 billion portfolio across the country by December 31st of 2027. And we think we'll be able to do that by opening 75 franchise locations. The vision is simple. We're taking a 7-step system that we released in the book that I set next to your chairs there. And basically, we're looking for local partners who can run leads that we generate through our software, source deals by working with local brokers, and we help them come up with the funding, both debt and equity, for the deals. Then they are also the asset manager who oversees the execution of the business plan. In our business, we're a little agnostic about the asset type, but we're very focused on what we call value add properties. If I buy a property for $3 and I put $1 into it and I'm all in for $4, I'll only do that deal if it's worth, say, $5. Now, what's cool about it is on the $4 that we have to come up with in capital, usually we've been able to get a bank to give us roughly $3 of that, so I'll raise $1 in private equity capital. So we have a track record of taking $1 and turning it into $2 in equity, and then we split that profit with our investors who come into the deals with us. What we offer our franchisees is a 4S model. We give them the strategy, we give them the 7-step investing system, we give them a software that we built from the ground up, and we give them support. So I'll just touch quickly on each of those. So the strategy is buying distressed commercial assets in the $1 to $20 million range, which generally is under what the institutional investors are looking for. So we're eliminating them as a competitor. We focus on multi-tenant properties so that we can diversify our risk across a different diverse base of tenants, and we focus on different types of properties so that we're not all in on one specific industry segment. We're looking to expand across the country, so the strategy is more now working out in multiple markets. Now, we're not buying Class A downtown office, I'm not buying large corporate office centers, and we're not buying standalone single-tenant retail properties. Really, our bread and butter is like a small bay industrial building in the suburbs that are around major metropolitan areas. We've identified that there's about 350 markets for this strategy. And again, we're looking to take $1 in equity and turn it into $2, typically within 2 to 3 years. That's our primary objective. So solving for value growth, not solving for cash-on-cash return or yield, those come as a bonus after the fact if we decide not to sell the property. The second thing is the 7-step investing system. If you look at the back of the book, I have it on there, but it's the 7 Fs. I love alliteration, so I came up with all F words. So the system is really quite simple. We find distressed assets, we figure out what to pay for them by solving for value growth, we fund them using debt and equity partners, then we fix them up, we fill the vacancies, we drive the financials to maximize financial performance, and then we free up our capital either by refinancing or selling. And so it's the private equity strategy for commercial real estate. We're buying at low earnings, we're trying to increase the underlying earnings, we're trying to increase the multiple by de-risking the property and the project, and then reposition it from a capital standpoint. The third S is software. That's my baby. I was working one day, I had 13 tabs open in my Chrome browser, and I realized I was spending $4,500 a month on all the various softwares that were necessary to run this business. And so I set out on a mission to license somebody else's software to be able to run our business all in one platform. And after 3 months of looking at literally everything on the market, I was not able to find anything that did it well. There was softwares that would do one thing well, like they would help you analyze a deal or do direct marketing, but there was nothing that did everything A to Z. And so I realized I had to build it. So we built the only end-to-end software that does everything A to Z. So our software does multi-sequence direct marketing to generate leads. It allows us to analyze deals. It allows us to streamline due diligence and the funding process. And then it has a full construction management, leasing management, property management, and accounting suite to literally do everything that we have to do after the fact, all within one roof. And it's become something that allows us to spend more time finding and funding deals and less time just doing remedial administrative work. What it also, I didn't realize it at the time, is allowing us to do is as we start franchising, we're able to monitor their activity instead of having people all over the country working on spreadsheets and things like that. The fourth S is support, and you can only learn so much from going through training. A lot of the stuff in this business, as you know, for those of you with experience with real estate, which I think most of you have, is that you learn by going through the deals. And as you move through the deals, there's a lot of things where they come up with questions, and that's where we give them a deal coach, we give them an accountability coach, and really we help partner with them on every single deal as they move through the process. And so our goal is to create success for the franchisees and really help people grow a profitable portfolio as we build a portfolio right alongside with them. Who we're really targeting, our avatar, is somebody that has a balance sheet problem. So they don't need to make other income to live off of. What they have is identifiably like $500,000 in net worth, and they're looking to turn that into $5 or $10 million in a short amount of time rather than just putting it in the stock market. So that's really who we're targeting. and they have to be able to qualify for commercial debt. So there's a much smaller segment of franchisees that are able to qualify for this model. That's why we're just never going to be the model that's opening 50 or 100 locations a year. We're really looking for a slow growth, but really deep relationships with each franchisee, because we have to support them. And as you can imagine, this concept requires quite a bit more training than some of the other concepts that are out there for franchising.
Have you franchised yet?
Yeah, so we opened our first location in the fourth quarter of last year in Colorado Springs. We opened one 14 days later in Denver. They've now closed on their first deal. They got 3 properties under contract in their first 12 months, which is actually a banner year. Typically, my target would be buy 1 property in your first year, buy 2 in your second year, buy 3 in your third year, and then 4 each year after that.
And when you say you have a store open, that's a person, that's an individual that you are now supporting and training. They're reading your book, they're going through your program to go and build a commercial real estate portfolio.
Yes, so we have 5 locations open in total, and we have about 3 more that are at the discovery day step that we anticipate to open in first quarter of next year.
How do you find the people?
About a third of our leads are coming from a paid ads funnel. We're using social media. A third of them are coming from franchise broker or consultant networks. And then a third of them are coming from, we utilized our software. We loaded a list of all the other franchisees out there, and we're actually using it to generate leads the same way we do in our property business. Direct mail, email, text, ringless voicemail, all the different things. So about a third of our leads now are coming from actually direct marketing that we're doing to potential franchise candidates.
Some of the support that you talked about, I'm wondering if that's how you get to 17% royalties, because that seems really high to me. Is that because of all the support that you're giving your franchisees?
Sure. So we actually don't have a royalty in our business. What we're doing is we're setting them up to duplicate what we're doing. And this kind of plays into the income thing, which I will get to that. Every time we buy a property, we form a new LLC. And that LLC in general, 50% of the ownership will go to the investors that put up the cash, 25% goes to the franchisee, and 25% goes to us as the franchisor. That LLC also pays an acquisition fee to us and the franchisee, and that's how they make money, and it pays an asset management fee to us and to them. So in a traditional franchise model, the franchisee gets all the revenue and they turn around and pay a percentage of that to the franchisor. In our model, they're actually not doing that. They're getting paid from the new LLC the same way we get paid from the new LLC. It's truly a 50-50 split on the fees and the profits interest in the new companies. Now, in terms of what an average deal looks like, we'd say we're targeting like $5 million deals as an average, right? 1 to 10 is kind of the range. But let's say a $5 million deal. If you went out and started a franchise and your first year you bought a $5 million property, you would get a $50,000 acquisition fee. At the franchisor, we also get a $50,000 acquisition fee. So think of it as like a broker commission for finding
Who's paying the acquisition fee?
It's the new LLC that gets formed, and it's customary in this business that the new LLC would pay the people that form the deal together. So essentially, it's raised in debt capital at 75% and equity capital.
I have a question.
Yeah.
Sorry, I just have semantics maybe at work here,
Sure.
But let's clarify a couple of things. So you came in today and you said you were looking for investors.
Yes.
So is that what you consider the private equity piece?
Yes. So our business actually has an affiliate called the CIG Value Add Fund. That fund is a corporate equity fund that we formed last fall, and that fund, my vision is for that to be the primary source of equity for our franchisees' deals. I'm looking for a $50 million partner there, but I'd settle for $25 million.
Okay, so and you're also looking for, not from us, but in general, for franchisees.
Yes.
And your all-in from your FDD is south of $100,000, right?
Well, we just revised our model slightly, so I can give you the revised model. You're looking at a $100,000 franchise fee, a $10,000 training and onboarding fee, and then you need roughly $100,000 in working capital to get through your first year. 25 grand in marketing, 25,000 for earnest money, let's say on your first deal, and another 50,000 in software costs and other working capital that you might need to run your business, because we can't open a franchise with somebody that relies on income from the business to get started. We need somebody who can go 1, 2, 3 years without earning income from the business, because it's really about amplifying their net worth. It's not about solving the income problem.
So you really have a small market. I mean,
you'd be surprised.
You need somebody who's quite wealthy right now or sitting pretty, right? If they can sacrifice in income for 2, 3 years and they still have a piggy bank, essentially,
sure.
Right?
Well, you can do this part-time on top of that. So our ideal avatar is somebody who owns 2 to 5 franchise units of another brand, and they have a problem. They're generating, let's say, $250,000 or more per year, and now what do? Do they give it to their financial advisor, or do they dive in and they do something where they can not only get their money to work, where they're getting 15 to 17% yield, which is what we estimate they will make on their capital each year, but now they're also building a business that has an enterprise value. And who would understand that more than somebody that already owns it? Especially if they own brick and mortar stores. If they own 15 brick and mortar stores, or actually they're leasing them all, they might say, why am I continuing to pay somebody rent when I can utilize this strategy to go buy all the real estate and pay myself the rent?
Hey, Mike, so oddly enough, I have a childhood friend that recently called me up, and he said, I'm done. I'm trading. I'm sick of watching you make all this money. I'm making my 500 grand a year. I'm going out of my mind. Clancy, I'm investing with you. What do I do? I said, well, I'm coming to my new deal. Put $250,000 in. I'll give you 3.5%. I'm about a year into it. Draw up operating agreements. He wires me 250 grand. He's got 3.5% of my deal. Keeps 100% of that. That guy is your target, right? That doesn't have someone like me to just, hey, tag along on my deal.
This is not your traditional franchise opportunity. This is a flipping opportunity in commercial real estate. Our franchisor is looking for franchisees who don't need cash from their business for maybe 1 to 3 years. Now, franchisees who are already in business and need a place to put their cash to work may be very interested in CIG. Here's John Clancy to size it up.
Kind of. For my fund, that is definitely who my target is. Accredited investors who have, $250,000 or more. For the franchise concept, it's somebody who may or may not have a lot of liquid cash to invest in the deals. They're looking for something to sink their teeth into. So I'm thinking of like a multi-unit franchisee, somebody who has all the systems in place. Now they're looking for their next gig. Or somebody who just sold their business. They're sitting on $50 million in cash, and they're like, hey, I'm looking for a way to invest my money that's a little more controllable than putting it in the stock market, but also have something to sink my teeth into. I'm not ready to retire.
Splits it 50-50 with you, basically, right?
The waterfall, if you will, is that they get a preferred return first. If you factor in their preferred return and the splits, they actually are getting 80 to 90% of the overall cash, but they get the majority of it through their preferred return first. We pay one of the industry highest preferred returns. It's common for most funds to pay like maybe a 5-6% preferred return or something like that. We're paying anywhere from 8% to 10% preferred return, because our model is set up where we win big when we do really well, but we don't get paid at all if we don't win big. And so that's why we set the preferred return up really high for the franchisees. So if you look at our splits, you might be like, well, it's customary. I'm normally seeing like 80-20 splits. Why are you at 50-50? There's 2 reasons. One, because anybody can go buy $100 million in real estate tomorrow if they just go buy things at retail full market price. We dig really, really hard to find value add deals, and they require significantly more work than just buying a property that's already fully leased or has long-term leases. So that's the first thing. We work twice as hard on the projects. The second thing is because we pay that higher preferred return, and when you factor that in, they really are getting the majority of the cash flow.
So are your franchisees counting on you to come up with the majority of the equity capital through your fund?
Yeah, that's a great question, Patrick. The model is set up where it's a partnership. We're both responsible for raising the capital. Now, because we get a fund management fee, we're incentivized to raise as much of that capital as possible through our corporate equity fund. How much easier would it be if one of you committed to coming into the corporate equity fund? Not only are you going to get the projected yield of 15 to 17%, but it'd make it easier for me to sell franchise. If I can say, hey, look, we already have a $50 million commitment over here, it's going to be easier to sell franchise. We're going to be able to grow much faster. But with that being said, I don't want to just hand them a fish. I also want to teach them to fish. As I said in my intro, I feel like raising private capital is really the secret sauce, and obviously finding deals as well, which is what our software helps with. But I have a strategy for helping them build a network of accredited investors that have between 100 and 250,000. And what we'll do is I teach them to build that list, and I say 50 times 50. If you have 50 people on your list and they can each throw in at least 50,000, you should be able to fund all of your deals. And how I get them there is a strategy to build that list. There's actually a lot of people that are accredited that are looking for good deals, and these are private deals that are hard to find.
Do you have a net worth and liquidity requirement then for your franchisee side?
Yeah, that's kind of a moving target. The 2023 version of our FDD is going to be a $500,000 net worth and a $250,000 liquidity.
You have an item 19?
We do. We did $3.2 million in earnings in the corporate location for 2021. $1.8 million of that was from capital gains. We sold some assets, and $1.4 million was from operating revenue. To give you an idea, in that year we did $2.2 million in revenue. For 2022, we're on track to do $6.6 million, and for 2023, we're on track to do between $13 and $14 million. And our model has it projected out that in 2027, we're going to do $250 million. Because every franchise that opens, if they average $10 million in acquisitions each year, we get a $100,000 acquisition fee just from that. On $100 million in cost basis, or excuse me, a $10 million cost basis, let's say we have 50 franchises, that's $500 million in real estate every year that they're buying, and on average our rental revenue is 16.5% of that, and what flows to the bottom line is 0.6%. So to give you an idea, at $1 billion portfolio, we're generating $60 million a year.
What is the good or service that the franchise produces?
The good or service?
In other words, a franchise model is...
It's an asset management business.
Okay, asset management.
Yep. So what they're doing is they're sourcing deals, raising private equity capital, and then they're the asset manager, which generally functions to oversee construction, leasing, and property management.
Okay.
In 2021, our portfolio was about $20 million in real estate. I think that year we bought 9 properties and sold 5. So we made $1.8 million on selling 5 properties, and the other $1.4 million was on like 5 properties remaining there.
Rental income.
Rental income, and that flowed through, net earnings. $1.4 million.
Okay.
In net earnings.
In rental net.
Rental
net earnings. Right?
Rental net income.
Okay.
Yes.
So Mike,
Our panel seems to think CIG is too challenging for franchising. They're all impressed with Mike. How could you not be? But how's he going to find franchisees like him? The panel says he's looking for a unicorn. Any of you a unicorn?
my challenge with this is not you. I think you really know your numbers, you know your business really, really well. I'm very impressed with you and your knowledge and what you have. I have a real challenge thinking that we're going to be able to find people like you that run this business. I don't think that from a scalability standpoint that this is too broad an offering for me. Like to look at this and go, wow, that's a needle in the haystack for the income, needle in the haystack for the knowledge, it's a lot to ask. I would be more apt to, if I was coming in, I would say, we handle the funding. Like I would make this more, the franchisee would be in charge of finding properties and renting them out or taking care of the property. But when you put them in charge of everything like this, I agree with you. I think it's too much. I don't know what anybody else
I
sees.
think he's looking for a unicorn.
Yeah.
Well, you found a few.
5.
You found a few unicorns, and how long did it take you to find them?
So I can speak to that.
Are they unicorns? Or are they friends? Are they people that you had contacts with? I mean,
it's impressive what you've done.
Yeah. I mean, we are generating right now 5 to 7 leads every single day, and of 100 leads that we're getting, roughly 10 of them qualify financially. You'd be surprised how many people are out there that have a passion for real estate. They're sick and tired of building something that's going to take a really long time for them to become financially free, and that has good credit and some connections. They don't need to know anything real estate. We'll teach them. That's why.
But they have to wait 2 years to make money.
No, they don't. No.
What am I missing?
They get paid on their first transaction.
Okay. They get a transaction fee of $50,000.
It's 1% of the purchase price.
Okay, whatever that is.
So when you model out unit economics, and I'm glad I can talk about it because I've not been able to talk about it to potential franchisees, but their first year is basically break even. Their second year, they'd be projected to make $150,000, and then that grows to somewhere around $500,000 in year 4 or 5 that they're making in cash flow every year. So I'm not saying they're not getting paid. They would actually recover their entire franchise fee on their very first deal. So in terms of return on investment, it's no different than another model. If you go buy a brick and mortar restaurant, it's going to take several months to find site selection, several months to build it out. Are you getting paid during that period? It's no different in this business. Our goal is within 60 days to get 2 properties under contract. It takes another 4 months to go through due diligence. They're probably going to cancel one of those deals. And if they can close on that deal, they get paid their acquisition fee. Now they're getting paid asset management fees on that rental revenue. But in most cases, these properties don't cash flow on day one. And that's the point. They can't rely on this. That's why I'm looking for somebody who either has some reserves so they can live off of it and they're comfortable with that.
I think we all heard 2 to 3 years.
Yeah.
But isn't that acquisition fee part of the money that they're putting in? They're paying themselves, really, right?
25% of it is their own money?
Yeah.
No, they're not putting money into the deals at all.
So then they don't come up with any money?
No. They can. They have the first right of refusal to put their money into
so you're relying on your fund, which is really the key to this, right?
I've done a consistent number of deals with investors that are comfortable with our track record of producing results for our investors where we don't have to invest into our deals to get our investors to invest.
I know we're short on time. Just 2 questions. Number 1, how much is in that fund now? And number 2, how big is your portfolio now that you can, that you say, when you talk to a guy like me, let's say I'm calling it, how much? What are you doing now? Like, can you say, hey, this is what I manage, this is what I do? Because that's important.
So up until we started this multi-asset fund, we were doing single asset funds. So every time we'd buy property, we'd create a new single asset fund. This is our first multi-asset fund. In the fund right now, we have about $5 million raised, and it's a cap of $100 million. We're looking to deploy somewhere around $15 million in 2023 and somewhere around $50 million the following year.
Are you not concerned that you could have one lawsuit in that multi-asseted fund that could take everybody else's profit away from it?
From one of the other investors?
Yes, if it's all
mixed
together.
But they have, he said it's all separate LLCs.
No, up to this point, it's all separate LLCs.
The multi-asset fund invests in the individual LLCs, so there's still individual LLCs that own the properties.
Okay.
Yep, and since we're short on time, I can't go into the full corporate equity structure. I'm happy to explore that further. To answer your other question, we don't measure our success by the size of our portfolio. We're a flipping company. So the goal is not necessarily building the size of the portfolio, it's driving earnings. And we feel pretty good that at 4 years in the corporate location, we drove $3.2 million in earnings. We're averaging 4 to 5 deals per year at an average of a $5 million size property. And that's what we think a fully mature franchise would do.
It is impressive, $3.2 million net.
Have you found that the flipping time has really grown to a longer period since the pandemic? I mean, supplies have gone up, workforce has gone down. I mean, we're remodeling a 1924 farmhouse and it's taken twice as long as it should have, and that's a house, right? So, and it's over budget. I mean, are you finding those issues in your buildings?
Yeah, there are, and that's why my 17 years of construction experience, I'm able to tap into things. We're not going and hiring a GC, right? We're bootstrapping everything. We're hiring subcontractors directly, and we have really good material relationships in place where we can ebb and flow. If that particular carpet's out of stock, then we just find this one over here. And we haven't had really any significant setbacks in our construction timelines.
Really?
Yeah.
You and I got to talk. You're going to oversee some of my projects.
Yeah. Yeah, because we're not doing new construction. It's all remodeling. So we can kind of pick and choose and alter on the fly.
Impressive, Mike, really.
Well, thank you.
Yeah.
So when you say an equity partner, you're looking twofold. You're looking for equity partner in the fund, but also in your corporate office as well, correct?
Yeah, so our umbrella company is actually 4 companies. So the fund is one, that's the raising capital arm. There's the franchisor. There's Commercial Investors Group, which is the corporate-owned location, which we're trying to duplicate in other franchises. And then the 4th business is CIG Holdings. So that company actually owns all of the real estate, but is not an operating entity. It's more or less a shell entity. So we don't need to sell any of the franchisor. We're in a really good cash position. We've been very blessed up until this point. What I'm really seeking is an equity partner who wants first pick of the litter on the deals. And they're going to get a great return under their fund. And in exchange for that commitment, I would be willing to give them some equity in the franchisor as a way to incentivize them to make a substantial commitment to the fund.
You're an impressive dude. I got to tell you that right now.
Thank you.
It's been great meeting you. I'm a medium on this idea. I think for a lot of the reasons that we've discussed on the panel, this is a different model, a unique model to franchising. It requires a unique set of skills and capital coming from you or from the franchisee themselves. But clearly those challenges are overcomable, and I expect that you'll continue to do well and succeed. So good luck.
Thank you.
I have to tell you, after reading the FDD and watching the video, I actually came in cold. I was like, I just don't think this is so complicated. And though I can't give you a hot, I am closer to hot than I was. But I have to give you a very, very warm. Because now you actually have me very curious and very interested, and I'm expecting to learn a lot more about your business model because I'm very, very curious in all the different aspects and levels of investment that you have moving forward. So thank you so much. I'm so impressed by you. Thank you.
I came in just the opposite.
Did ya?
Yes, I was. I thought that this, I like the idea of a commercial real estate play and this side. I think that you're really impressive and your business is sound, but for me, and looking at this from the franchising side, and there's just a lot of moving parts for a franchisee to get their hands around, and I think that unicorn that you're looking for, while kudos to you to find those 5 that you have right now, and hopefully you can find more like that and move it forward from there. But I'm like a tale of two cities here. I'm very high on you and your business, but I'm cold on the franchising side because I just think that there's too much here for I wouldn't say a typical franchisee, but for anything else that's out there on the marketplace. And I'd kind of switch it up a little bit if I was doing it, like I said earlier, but that's how I see it right now.
Good, thank you.
Yeah, like I said, Mike, you're an impressive guy. I am hot on everything that you've done. The fact that you actually have franchisees that are doing this in a relatively short period of time. You've proven it with 3.2 or 3.4, I forget what you said, 3.2 million. That's very impressive. Obviously, this is not a typical franchise deal. I mean, you know that, right?
Right.
And by the way, you're not a typical franchise guy. But that's good. And I'm still trying to figure out, I'll process it over the next few days why you just don't go out and build a huge real estate portfolio, because you have what it takes. You could sell private equity, you have a track record, you have good credit. You could just build your own real estate portfolio and become independently wealthy. You're a relatively young guy.
Well, he could do that, and you utilize the franchisees for the sales side.
Yeah, you could do that too.
Finding deals.
You could use them as your
you
could use them as your kind of finders and set up a fee arrangement with them. But look, what you put together is impressive, and you've really thought it through. Not like I've read your entire book, but I got a pretty good idea of what it's about. And I got to tell you, I'm very, very impressed.
Thank you.
Well, Mike, this is a really sexy concept here, for sure. You got everybody's juices flowing and brains spinning as to the possibilities and opportunities that this brings. And so I from a franchising standpoint, I'm cold. From a concept standpoint, I'm really hot. I mean, I think it's fabulous. I think you're fabulous. I think you've thought through everything.
Thank you very much for joining us on the Franchise Hot Seat. We really appreciate it.
Thank you.
Thanks, Mike.
CIG was a challenge for our dream team. They love Mike, but the complexity of the business seems overwhelming for franchising. If you're a unicorn, this may be your perfect franchise opportunity. Here's Mike again.
Yeah, I see why they call it the hot seat. Overall, I'm supremely grateful for the advice. I think the biggest thing I'm taking out of it is really to find ways to perform some of the more complicated services at corporate. In terms of being able to find qualified candidates, I think it's refining the marketing plan and really thinking through all the things that we're doing to secure these people, but I know they're out there. And I know that there's a lot of people that are going to benefit from this system. I truly believe that when you put a pathway in front of people that allows them to unlock their own potential, and ultimately as a result of that is buying back their time so they can be at their kids' soccer games.
Thanks for joining us for the Franchise Hot Seat. And remember, our purpose is to inform and educate. We are not selling franchises. Do your homework before investing in any business. Franchising is a powerful methodology for business ownership, and it may be the best way for you to own a business and build personal wealth. But franchising is not without risk, and it's not for everyone. Some quick thank yous to our sponsors. Transworld Business Advisors is the world leader in the marketing and sales of businesses, franchises, and mergers and acquisitions. They've got 240 offices worldwide. Accurate Franchising is a full-service consulting and development agency that helps franchise companies develop their brands and then expand via franchise sales. Crank Enterprises is a venture marketing company introducing a modern-day twist to private equity. Their mission, turn ideas into dough. You want to sit in the franchise hot seat, or do you have a question for the Titus Center? Contact me at tituscenter.com. I'm John Hayes, leading the Titus Center for Franchising, where we're educating the next franchise generation.